Hi guys, welcome back to Day Trade Diary. Today is the 29th of April 2026. It is day number 61 of our recorded trading journey. Give you an update about what happened yesterday. So first of all, for Oanda, we're at 14,699 with a 70% exposure, and for Binance Bitcoin or crypto, we're at 10,241 with an 18% exposure. Total net asset value 24,940 US dollars, and that is a 5.99% gain, or in US dollars terms 1,410. Our net asset value or equity curve looks something like this. So you can see it has been not volatile at all in the past 3 weeks or so. So we hope to get some sort of volatility like this in the near future in silver and also in Bitcoin, which are our primary holdings at the moment. So that we can load up back on our ladder or our grid. As you can see, the Binance crypto now is very low exposure. So if the thesis is correct that we are in a bear market and global liquidity is drying up, Bitcoin should suffer from this, and it should go down a lot more from these levels. We are currently sitting around 77,000 US dollars. And if it does hit 50,000, 40,000, that would be great in a way for this trading strategy to load up on that. So let's look first of all at Bitcoin. We had one buy and one sell yesterday here at this level. Let's put it on the hourly chart to keep consistent. So yeah, it was at 1 p.m. yesterday, my time, and then it just sold take profit a while ago. So yeah, the system seems to be working well. I'd like to remind you that each take profit is about $4 US profit. Not a lot, but then we are trying to manage our risk as best as we can. So you might pull power this and say 6% over 61 days is low. And it is low, but if you analyze it, 6 times 360 is times 6, so it's about 36% roughly annualized, 36 to 40%. So 40% per year is not too shabby at all if you can do it consistently year after year. So that was for Bitcoin. And then for Oanda, unfortunately, we have no activity whatsoever since our last update. So gold, silver, copper, everything is just it's trending down, but not in any big kind of spike. You can see the average true range, which is a measure of volatility. This keeps declining and declining, and this causes our grid to be, the spacing between our grid to be becoming larger relative to the volatility, and this causes very few trades to be hit at all. So we can look at gold as well. You can look at the measure of volatility, ATR10 here. It's also going down, and prices are going down. So let's do a quick check. So for bonds as well, it might hit, and also is going down, the volatility. China as well. China stock seems to be doing quite well. I may invest in it in my spot portfolio. Let's have a look. This is the monthly chart. So the rumblings are that Bank of China will increase the liquidity into their market to prop up their market, especially like the stock and the real estate market. So yeah, it might be a good idea to buy some Chinese stocks in a spot holding. Wow, oil is just bonkers at the moment. I guess this conflict in Iran is not over, and there's also structural shortages in the oil market, and it's also commodities tend to pop in the late liquidity cycle. So risk assets are tapering down, and gold, silver, precious metals, commodities like copper and oil tend to go next, according to the liquidity experts. This is part of the cycle where oil oil stocks, copper, all seem to be getting a bid. Let's look at copper. Looks good. And finally, S&P 500. That's just bonkers. Yeah. Finally, yeah, we already looked at gold. Gold seems to be turning over a bit, but everything else seems to be uh, popping off in terms of like copper and oil stocks. So we'll start to look at that more intensely to see if there are any opportunities there. Okay, that's just me for today. Just a short update, and I'll see you guys tomorrow. Take care now. Bye bye.